What is going on with the markets? Are the markets about to crash? Are the markets about to break out? Where are we? Well, let me show you. First, let me introduce myself. I'm Bagadon from StockMarketCaddy.com. Today is Saturday, September 16th. You're looking at a chart, a highly specialized chart, that shows you the price action of the S&P 500, the biggest, deepest markets in the world. As goes the S&P 500, so goes everything else. The Dow, the Russell, the Wilshire 5000, everything else. The markets have been commoditized. There really isn't much difference. Money flows in, money flows out. So let's take a look at the money flow, and let me explain to you what you are looking at. This particular chart of the S&P 500 is what we call a three-line break chart. Green is up, red is down. We'll leave it for that for right now. It is a weekly view, not one of those wild-eyed day traders. And God knows we trade daily, we even trade intraday, but this is a weekly view. This tool down below here is one of our proprietary tools called the GPS Near Indicator. This shows us not the volume, but the momentum of that money flow. You see, folks, one of the things that precedes the movement of price is momentum. Momentum up or momentum down. And when there's divergence of momentum, many times, not always, but many times, you can get a hint of what is to come next. Currently today, the market closed right here at 4450.32. Last week, the market rejected these higher prices, and we are on a descent. Now, nobody can say with certainty where the market will be, but we can tell you that it has spoken to us right here. It's rejected those higher prices, and the movement of the price action over the next few weeks, maybe longer, is down. It needs to come down and challenge this price, 35.93. 35.93. If this holds, it might bounce. But right now, the market is trapped between 45.95, 4600, and this level here at 3600. If this area gets challenged, and if this area should break, we will next come down to this area of 3275, and it's entirely possible that we challenge the COVID low, which was down here at 2315. And if this area does not hold, we could actually go much lower. Now, let me show you something. I'm going to show you just a little bit. Bear with me. I've expanded the range, not just, we're still here, this is a weekly chart, but I've expanded the range so that you could see the low of 2008, 2009. And this is where we are. Now, what I want to show you is a tool that we call Fibonacci. And I'm going to go get this. I want a Fibonacci retracement line. And I'm going to capture that low from 2009. And I'm going to bring it up to the obvious high of 4762. That's how high the market actually got, the S&P 500. What I want to show you is that this run, it would be normal. It would be healthy if we retraced 50% of this move. Where would that put us? Right here. And let me change the color to a bright, how about we make it a bright red? And let's see if we can increase this font size so that you can see it. Increase the thickness. That is 27. See if we can increase that. I want you to be able to see that label. Bear with me. Make it nice and big. There it is, 27.24. It would be normal for the market to come down to 27.24. What it does from there is anything possible. It could take years for us to come back up here, but it is more than likely, if it breaks that, it is more than likely to challenge, as we mentioned earlier, this low right down in here, which would be a Fibonacci retracement of 618, which is a very common Fibonacci retracement. I also want to bring your eyes to this momentum indicator. When we were making our run up to the highs, you can see the very large build of momentum. Notice as we go back up to challenge those highs, look where the momentum is. And let me draw you a trend line. This is how we can discern. We could actually take it down into here, but you can see, and we'll make this nice and thick. You can see that it didn't have the same enthusiasm of buying here, and you can see it really drop off like a cliff. So it is no surprise to us that the price has pulled back. You see, we're tracking money flow. Is the flow of the money strong or is it weak? These markets are controlled by machines, and we do trade by machine, mechanically and robotically. If there are no buyers up here, the machines will take the market down to wherever there are buyers. And when it hits those levels, we will be watching and we will be buying. We're not buying now. We're taking precautions, and would be a good idea, if anybody is in this market, that they be taking precautions. What kind of precautions? You could be selling covered calls against your positions. You could be selling half of your positions. You could be raising cash levels. You could be buying bearish options to hedge your long portfolio. You see, if the market does come down to this level, your portfolio will also come down. There will be great buys to be had, but if you don't have any available cash, you won't be able to buy anything. I am Bagadon at StockMarketCaddy.com. I'm not a broker. I'm not a financial advisor. We don't make specific recommendations to buy or sell, and we don't manage anyone else's money. We are a mentoring site for those investors, those traders who want to learn to trade mechanically, robotically, and robotically hedge. Trading as a business, creating cash flow, protecting that equity curve. It does you no good to have ridden the S&P from 09 to where it was here, only to give it all back. The idea of this game is to advance and hold ground. It is not possible to hold the very peak or to pick the very low, but it is possible if you do nothing to lose 30%, 50%, 80% of your portfolio? Feel free to give us a shout. 813-758-8263. Good luck, everybody.